Hi guys, Harry Yotis here, professional trader for 20 years. Started my career in 2005, and still going strong in 2026. Okay, so today I thought I'd make this quick video about how I look at potential trades, specifically in the silver market. I like precious metals going forward. I think they have a very good tailwind and fundamental thesis to be in it. And if you guys have been following my videos, I've been saying for a while that I'm looking to enter the silver and gold space on this consolidation. After the big hit, I'm waiting for a consolidation before buying. Okay, I'm shooting this video on Saturday, the 21st of February, 2026. This candle here is a chart of silver. This candle here is what happened on Friday. Okay, as you can see, for the whole week it was muted. I was looking to enter some trades based on silver. Specifically the silver miners, but on Friday, boom, that silver made a move without even, without even consulting me. How dare it? Okay, so it's made its move, but basically, we're still looking to buy into this space via the miners. Okay, so you know that after this big pullback, we are looking to the miners to take more of a levered effect on the price of silver. I want to play it. I want to play this silver move via the miners because there's more profit potential. Okay, so let's check out the overall miners. SIL is the Global X Silver Miners ETF. As you can see, it's trading near highs. Okay, for the whole week, I don't know if you can see it, but this candle right here is this green candle is Friday, and then this week started on Tuesday, Wednesday, Thursday, Friday. The miners in silver were going up as the metal. Okay, let's annotate here for a while. Okay, up arrow. Okay, this is Tuesday, Wednesday, Thursday, Friday of this past week. Okay, so we're saying Tuesday the 17th and Friday the 20th. Boom, silver, the majors are ripping. Now, what happened with silver during this time? As you can see, silver wasn't doing much. Okay, the equivalent is here. It was going up a bit, but not even close to, it's not even going close to its highs. It's still hovering near the lows, whereas the silver majors were approaching their highs. So the miners were like outperforming to a certain degree. Okay, it's not important, but just goes to show you that sometimes you don't have the chance. The miners might move before the metal does, which is usually a good sign for the entire space. Okay, let's just get rid of this for now. So as you can see, because the miners, even the silver juniors, okay, the junior miner index is ripping close to its highs. Okay, it's literally like 10% off its highs, whereas silver itself is, it's 84. The highs were like 117, 120 it hit. So it's not 10% of its highs. It's way more than 10%. So the miners are making the move before the metal, okay? So that makes it difficult to enter the space. However, I was looking at 3 of the majors. I like the majors. The leader, in my opinion, is Pan American Silver, okay? These guys have been crushing it. Look, it's already made its move. It was consolidating. If you can bring in the moving averages, this is where the moving averages are very important. The touch of the 50 is the most important thing. Guys, keep that in mind. The first touch of the 50 after a breakout, look, breakout here, the first touch of the 50 is a buying opportunity, and that happened here. Okay, the February the 5th, nobody wanted to buy it because February 5th, what is it? No, it was the 5th of February. Okay, so what happened with silver? Everybody on the 5th of February was this red candle here. Look at this giant big hit, little like bear flag, and then boom, down on the 5th of February. Nobody wanted to buy it. Everybody was super scared. Yet that was the ideal time to buy Pan American Silver. And it retested the 50 here later on. So you had a lot of opportunities to buy Pan American Silver. Okay, this ran away from me. Okay, I'm still holding a small position, but I should have added, I too was waiting for silver to calm down. I didn't think silver had finished going down because I was expecting silver to be weak during the lunar Chinese New Year, and it was until Friday. Okay, I was expecting even more weakness. Who knows? Maybe next week we get more weakness. I was looking to buy. Okay, Pan American Silver is one, although I wouldn't touch it right now. Okay, we also had Coeur Mining. Okay, another big one. That too is very, very similar story. Okay, touch the 50 at the same time, and that's when you want to buy it. Another market leader approaching near the highs. The high here was about 27.65. It's 24.65. So it's less than about 10%, a little bit more than 10% off its highs. Okay. Again, same story. These majors are moving before the metal. Another good story to be in this space. It leaves us with, this is the one that I was looking at, Hecla. Hecla was touching the 50s, the 50-day moving average in red, and beautiful to enter it. The reason I like Hecla, this is the one I would pick. Okay, and this is the one I'm looking to get in on. Friday, I still have a bit. This is the one I have the most of the majors, but I want to add to it badly. Okay, so we had a chance, I did, okay, to play this. I don't, not via shares, but via an option structure. Okay, so I'm still looking to get into this via the option structure because it's hugging the 50 and waiting to make its move. This guy, it could also make a very, very good move. Okay, so how would I play it? Okay, what option structure would I use to play Hecla? That's the big deal. Okay, this is how you have to decide how to structure a trade where it benefits you more without you taking a lot of risk. Okay, so let's look at the option structure. Now, let's go here. This is Hecla's option structure. This is April. The top are the days to expiry. The strike prices are here. This is where the calls are. I have the bid ask for the calls. And this is where the puts are. And you have the bid ask here for the puts. This is Saturday, so it's not active. And it's very tough to see, but we'll get through it, okay? And what I really wanted to play, okay, if we go back to the chart, for me, the best, well, let's try it here. I'll just draw it. Okay, for me, I was looking at I want to be close to the market, but I was trying to get in on it around here. Friday blew me away because as the market rises, you're not going to get your call price. Okay, so for me, I wanted to buy a call here. This was my structure. Buy the 25s and sell the 35s right at new highs. Okay, so sell the 35s. Sell a call. Why do I want to do this? Why don't I just buy the call? Okay, well, because as you can see, via the silver price, I mean, you don't even have to go look at the volatility. Very, very volatile. So you don't really want to be a buyer of options when it's that volatile. However, okay, in this situation here, so you know about the 50-day moving averages. Let's get rid of them so we can be more clear here. In this situation here, when you buy a call and you sell a call, this call is also highly priced. So it mitigates the high volatility, which means high option prices, okay? So if we go back to the options, okay, what I wanted to do was I wanted to buy here. I'm looking at the bid-ask spreads on the 25 strike price for Hecla, okay? And I don't want April. I want to go far, okay? We have April, which is regular, okay? I don't want the April. Which one do we choose? That's the next step, okay? I don't want April because April doesn't give me that much of a series. I have the 14 strikes to the 30. If I buy the 24s, okay, and sell the 25s and sell the 30s, it's not enough. I get $6. It's like, look, I buy the 24s or 25s, and 25 I wanted to buy, okay, and I sell the 30s. It's like, it's not that much. I'm gonna pay $1.50 to make what, $5? That's not a good risk reward, okay? I might have to sell another option here, which we'll get to it later. But in terms of just the call option spread, it's not that great of a risk of reward. $5 potential profit, and it's going to cost me maybe the midpoint, $1 to $1.50, probably $1.30. It's not that much, okay? It's okay, but it's not. It won't change the needle, okay? You want it a bit higher. A bit lower. You want a better risk reward. I guess you can do it. It's not that bad. I mean, you might get it at $1, and then it would be worth it, 5 to 1 maybe. But then I would like to add more to it. And you have till April for the move to go. Okay, because the volatility here is high. It can go. It's like over 80% implied volatility. Okay, so that's very, very good. So I looked at June. I wanted to have more time, okay? And look, you have more series, okay? So I can buy the 25s here and sell the 35s. I could even do the 30 if I want, okay? But I'm going to go for the 35s. Let's clear all legs first. I want to buy the 25s, sell the 35s, okay? That's like a little bit better. Same thing, you have 10, but now you're at the same problem you had before. You're at 228, 250, and you're getting 10. It's like 4 to 1, 5 to 1. You had the same problem that you have with April. Okay, so you can do April or June, pretty much the same problem. Okay, so but here you have a bigger chance. You can maneuver. You can like get rid of this one and go for the 30. You know, still same problem. 150, $5. It's not. You're getting a $5 profit potential, and it might cost you 150. It's not worth it. Okay, so that's why I like to go farther. You have the 25, 35 call. That's going to cost you 230 to $3. It could be 250. So that's 4 to 1. It's not worth it. Okay, it's the same problem. However, I want time, and to mitigate this problem, which is what I want to do, okay, is mitigate this problem of a risk reward. What I want to do is I want to sell a put, because that's going to be the high volatility will get me better entry price. So what I want to do here is sell the 15 or 16, whatever you're comfortable with. Okay, you can sell the 15 I like, because it's right at this support level. Okay, so I want to sell a put. Oops, I put buy. Okay, let's just go here. Let's just put sell here. Okay. That now, when you sell a put that is out of the money 15, at 15 or 16, whatever you feel like is your risk reward, I like 15, it'll lower the premium. Okay, so I'm going to go all the way down to 15 and sell it, and you could get 130 to 229. Okay, this is a problem because, as I mentioned before, okay, this up day made the options expensive. But here, when I was making this play, okay, here I was very, very close to getting this entire spread here for $1. Okay, but now because the price went up, it's trading at 24. But imagine if the price were trading at 22, you can get this. I was so close to getting it. Here it's $1.29 to $2.29, so you might get it at $1.75. Okay, which it blew it out. But before it was trading very, very close, like 80 cents to 120. I was right in the middle of getting this spread for $1. Now I love this, because to me, I'm getting it for $1. I have $10 of profit. $10 of profit. I have until June that it comes in. It's a long time. And I don't care about owning Hecla at 15. Why? Okay, that's another key that you have to figure out. Why do I want Hecla at 15? Because as you can see with Hecla, it's been losing money. Look, not losing money, but underperforming, okay, on its earnings here. Look, the earnings were underperformed by 23% in February 2025, okay? In May 2020, they underperformed by 13%. But ever since this breakout here, okay, ever since this breakout, boom, after this earnings season that beat in August of 2025, they beat by 40%, and the revenues too are climbing. Ever since then, they've beat. Look, here they beat by 23%. Here, they beat again by 20%. They keep beating on both top and bottom line. Okay, so this is, I know it's fundamentally strong like this. If it ever goes down to 15, I'll gladly take it. Okay, so but remember, your risk is you get assigned at 15. So I want it at 15. If it ever goes down here with silver at these levels, it's a gift. I'll take it. Okay, so that's why for the structure, I like the 25 calls to buy, 35 calls to sell, and sell the 15 or 16. I would take either one. Okay, but to me, now that the spread is blown out, now it's at 150, you might get it, maybe 175, maybe $2. At that point, at $2, you're getting it's not worth it. The risk reward, it might pan out. Just for me, it's just not worth it. I'm waiting for it to come back in, hopefully. Okay, and if it doesn't come back in, well, I'll just ride with what I have. Okay. This is why the spreads are necessary, especially this put for me is necessary because the premiums are so high and you can take advantage of lowering the overall cost. And I like Hecla because Hecla hasn't made a move like Pan American Silver, okay, or CDE, Coeur Mining. See, so Hecla, even though it's been outperforming recently, has the biggest profit potential. in my view. Okay, so that's it. A little short synopsis, if you will, of how I would like to enter the silver space, because silver is moving. Too bad it did this on Friday. I'm really upset that silver went up on Friday and we made money, because I wanted to really, really enter this space. Okay, it could go sideways and we could have another chance. We'll see, but I think we might not. I'm feeling a little bit antsy. Okay, I wish this Friday move didn't happen. I would have entered a lot of positions on Friday, but whatever. You play with what you have. So for me, the play right now is Hecla. I like this spread, and I like it going into June. I like to have a lot of space before the move is made. Okay, you might be able to do the April, okay, and get away with it. But to me, I need more time. Okay, and there's no May contract, so we're gonna go for the June, which also takes into account this earnings season, which could blow it up. April, you won't have. Blow up means positive, not blow up the stock, but they could again outperform by 20%, 23%, because silver hasn't moved. The price is still very, very, it's moved. It's not at $25 anymore, it's 75. So I think they blow it out of the water, and we get a bigger chance to realize this top level of 35 and even higher. Okay, so that's my thoughts, guys. Overall, I like Hecla, I like silver, I like the precious metals. Talk to you later.